Welcome to home ownership. Crossing the threshold of a house that is finally yours is an incredible feeling and a major life milestone. But that dream can turn sideways fast. A single unexpected storm or house fire can put you under immense financial strain if you aren't ready for it. To prevent that, we are going to build a comprehensive property protection and disaster preparedness checklist. By the end of this video, you will have three things: a strategy to secure your long-term financial safety, a packed emergency records kit, and a post-disaster cash flow plan. Moving from an overwhelmed buyer to a fully prepared homeowner is the surest way to guarantee your new house remains a safe investment rather than a liability. Let's get started. Step 1 is documenting what you actually own. Take out your smartphone and do a slow video walkthrough of every room in your house. Open up your closets and drawers. Make sure to capture the serial numbers on your electronics and keep a digital folder of receipts for big-ticket items. With your inventory complete, you need to match it with your primary financial safety net, the standard HO3 homeowners insurance policy. This chart shows how your policy values your property, and you have to choose between two very different payout methods: actual cash value and replacement cost value. Actual cash value pays you the depreciated price of your items, meaning you'll likely have to pay out of pocket to buy a new one. Replacement cost value pays exactly what it costs to buy that item brand new at today's retail prices. Now, many buyers assume their standard policy covers any damage their home might face. That is a dangerous assumption. If you open your policy to pages 11 and 12, you will find a section explicitly labeled exclusions. Standard policies almost universally exclude catastrophic events like floods and earthquakes. If you live in an area prone to these threats, you must purchase separate, specialized policies to cover them. When you pair an accurate home inventory with a carefully optimized, exclusion-aware insurance policy, you protect yourself from massive out-of-pocket losses after a disaster strikes. Insurance pays for damage after the fact, but physical mitigation stops specific disasters from causing structural damage in the first place. You can install smart sensors around your plumbing and appliances. These devices send alerts to your phone for unseen leaks or drops in temperature, warning you before a pipe freezes and bursts. You can also prepare for severe weather by installing storm shutters or simply anchoring heavy, tall furniture directly to your wall studs. Next, you need a physical backup for your vital information. It's time to assemble an emergency records kit. Find a sturdy, waterproof container like this red storage bin. It needs to be highly visible and portable so you can grab it in seconds during an evacuation. Inside, pack copies of your property deed, your passports, birth certificates, a hard copy of your home inventory, and a supply of physical cash. Maintaining these physical upgrades and having a hard copy records kit gives you a vital safety bridge to rely on when digital systems and local infrastructure fail. The most overlooked danger of a natural disaster isn't the physical damage, it's the immediate, severe disruption to your personal cash flow. When sudden disaster expenses collide with rising insurance premiums, a household's risk of missing mortgage payments and falling into delinquency spikes. This flowchart outlines exactly how a local economic freeze happens. The disaster strikes, taking out power grids and ATMs. Your income stream gets interrupted, leaving you cut off from funds, which leads directly to mortgage delinquency. To bypass this cycle, save 3 to 6 months of living expenses in an out-of-town bank account. This keeps your funds accessible even if your local branches and power grids go down. You should also use the additional living expenses provision in your insurance policy. This clause forces the insurer to cover your immediate survival costs, like hotel stays and food. Finally, create a physical list of emergency contact numbers for all your creditors. If you know you are going to fall behind, call them to negotiate a repayment plan before you actually miss a payment. Preserving your liquid cash and maintaining open communication with your lenders gives you the defense you need to save your home from foreclosure during the recovery process. You now have a comprehensive safety net in place. You have a documented asset inventory, an optimized insurance shield, and smart physical mitigations installed. You also have your physical emergency preparations ready to go, including a packed records bin and a reliable cash flow protection plan. Your immediate homework is to open your HO3 policy to page 11, read your specific exclusions, and then call your insurance agent to close any gaps. By completing these proactive steps, you have moved your home from a point of vulnerability to a secure investment backed by evidence and a plan.